Alibaba has been given the green light by the Hong Kong Stock Exchange, HKEX, for a secondary listing in the city that could raise up to $15 billion, £11.7 billion, in what is set to be one of the biggest fundraisings in the world this year. The Chinese online retail giant is set to begin a week-long investor roadshow today after winning approval for the fundraising from HKEX's listing committee, the Financial Times reported. Read more. Chinese e-commerce giant Alibaba eyes $15 billion Hong Kong listing and boost for troubled city. Alibaba is hoping to raise between $10 billion and $15 billion from the share sale, according to the paper. The listing's pricing is expected to be confirmed on the 20th of November, with the shares beginning trading in Hong Kong during the week of the 25th of November, according to reports in the South China Morning Post, the English-language Hong Kong newspaper owned by Alibaba. The fundraising would also top Uber's $8 billion initial public offering, IPO, in New York in May, and surpass the $5 billion IPO of InBev's Asia-Pacific unit in Hong Kong in September. Alibaba, which listed in New York 5 years ago, had filed for a Hong Kong listing in June with hopes of raising up to $20 billion, but plans were stalled amid deepening unrest in the territory.A. multi-billion-dollar listing would be a major success for Hong Kong's bourse, which has suffered as political unrest hit market sentiment in the financial hub. Read more. FTSE 100 staggers under Trump's tariff threat and Hong Kong turmoil. The territory's transport network has been crippled by often violent protests this week after police shot an unarmed protester at close range on Monday, and police said rioters doused a man with petrol and set him on fire. Many businesses and schools in Hong Kong closed on Wednesday following the escalations, which have seen some of the worst violence since protests began 5 months ago. Main image credit, Getty. For more on this story, visit the news article link.